Germany and Italy are gearing up to pull off a bold plan to haul 1,930 tons of gold, worth a massive $209 billion, out of the New York Federal Reserve's fortress-like vaults and back to Europe in just 8 weeks, using NATO cargo planes, a decision that sparked heated arguments in Berlin and Rome, laid bare weaknesses in America's long-held role as the world's go-to gold keeper, and could upend the global economic system. By summer 2025, a leaked report blew the lid off this unprecedented operation, plunging Washington into a financial diplomacy mess as more than half of Germans now push for keeping their country's gold at home, clashing with Chancellor Friedrich Merz's careful approach, while Italy's Prime Minister Giorgia Meloni uses the gold as a bargaining chip in a fierce trade spat with the Trump administration, drawing heavy attention to the alternative for Deutschland AfD's nonstop pressure on Merz, and raising big questions about what this means for America's borrowing costs and the dollar's grip as the world's top reserve currency. Germany's Bundesbank holds 3,352 tons of gold, with 1,236 tons valued at $134 billion at a spot price of $3,086 per ounce, stashed in the New York Fed's 24-meter-deep steel vaults, a holdover from post-World War II deals that showed trust in America's financial system, while Italy has 2,451 tons, including 694 tons, worth $75 billion, still in the U.S., adding up to 1,930 tons between them, a huge amount tied to the geopolitical bonds of the Bretton Woods era. In Berlin, the far-right AfD, led by co-chair Alice Weidel, has been banging the drum for gold repatriation as a matter of national pride since 2013, with its platform flat-out demanding all German gold be stored at home to guard against Eurozone ups and downs, European Central Bank ECB negative interest rate policies, and what they see as America's financial overreach, slamming Merz's Christian Democratic Union for risking national wealth by leaving it exposed on Wall Street, a message that caught fire after Weidel's blistering April 4, 2025 press conference, where she ripped into Merz for supposedly caving to Washington by Italy's similar moves under Meloni, the Eurozone's second biggest gold holder. The Bundesbank's 2013 to 2017 repatriation of 674 tons from Paris and New York, carried out with pinpoint accuracy using IL-76 and C-17 cargo planes under NATO watch, shows Germany can handle the logistics, with nighttime shipments of 20 to 50 tons, proving large-scale transfers are doable. But the political drive is still a hot potato, as Merz juggles domestic demands with global ties. With trade tensions spiking under the Trump administration, which has slapped harsh tariffs on German car exports and steel limits, a view backed by seasoned CDU European Parliament member Markus Ferber, who in May 2025 tied President Trump's bold Federal Reserve comments to risks of America tapping foreign gold reserves. Merz's plan is to win back economic trust sapped by the AfD's climbing poll numbers, which feed on public skepticism about global financial systems. But the German finance ministry's handoff to the Bundesbank, which calmly called the New York Fed a solid and dependable vault, highlights Merz's bind. Bringing the gold home could scream distrust in a major ally, yet it shores up his standing at home amid rising nationalist vibes. In Rome, Prime Minister Meloni, who back in 2019 as an opposition figure swore to bring Italy's gold to the Villa Borghese vaults, now walks a tightrope chasing trade deals with the Trump administration while facing heat to keep her promise, a step that could sour ties with America and shift Italy's economic stance in the Eurozone. On the logistics front, the Bundesbank and Bank of Italy have mapped out weekly shipments of 50 to 60 tons at midnight, using NATO standard planes to keep things low-key, a move that had cut the New York Fed's foreign gold holdings by about $29 billion a month. A $20 billion jump in bid-ask volumes at the Fed's daily overnight reverse repo auctions could nudge policy rates toward the top of the interest rate range, setting off a chain reaction hitting mortgage rates, business loans, and overall economic steadiness in America. Plus, Germany and Italy pulling back their $18 billion short-term Treasury bill holdings, kept as a backup plan, could bump 10-year bond yields by another 5 to 6 basis points, piling more pressure on America's federal debt costs, already pegged at $659 billion in 2024 and set to hit $770 billion by 2026, per the Congressional Budget Office, as the New York Fed's vault loses its safe haven shine. This could kick off a major shift in how treasuries are viewed, with midterm downward pressure on the dollar index. If smaller players like the Netherlands, Austria, or Belgium jump on the bandwagon, speeding up the global pivot to gold, which went from 11% of central bank reserves in 2000 to 20% by 2024 per Bank for International Settlements figures, with forecasts eyeing 25% by 2028, potentially wiping out $800 billion in treasury demand. That kind of drop could lift neutral interest rates in America from 2.5 to 3% to around 3.5%, seriously limiting the Federal Reserve's room to tackle inflation without choking growth. A setup that could rewrite monetary policy for years. America's housing market, already under strain, would take a hit fast, with 30-year fixed mortgage rate climbing by 20 to 25 basis points, tacking on $380 a year to a $350,000 loan, cooling demand and possibly slashing housing starts by 5.6 to 6% in 2026, leading to a 2 million ton drop in need for construction steel and cement, key for building projects. The auto industry, facing loan rates nearing 8.5%, could lose 500,000 sales a year, putting over 10,000 factory jobs at risk in the Detroit, Ohio belt, where rising wages already squeeze margins. Municipal bond yields, up by about 30 basis points alongside Treasury yields, could force cities to rebid infrastructure work, stalling projects like bridges, roads, and transit, and worsening economic slumps in regions, widening urban-rural gaps. To counter this domino effect, Washington might roll out new financial tools, like a Federal Reserve covered bond window that takes gold as collateral, a quick fix for liquidity that could backfire by boosting gold's clout and chipping away at the dollar's reserve dominance, or by beefing up swap lines with the ECB and other big economies' central banks to steady cash flow, a move that only works while the world still trusts the dollar, which is starting to wobble. In Germany, the CDU-SPD Greens coalition is grappling with growing public pushback, fueled by the German Taxpayers Association's petition to Congress to bring all gold home. Bundesbank officials, though, stick up for the New York Fed's dependability, putting Merz in a tough spot. In Italy, Meloni's call depends on how trade talks with Trump shake out. If she doesn't get enough give on steel or aluminum tariffs, she might fast-track the Villa Borghese vault plan, turning it into a bold symbol of Italy's economic freedom and a direct shot at America's financial sway. The bigger fallout from this gold rush goes way beyond moving metal. It's a game changer in the post-Bretton Woods setup, where blind faith in the dollar's top spot, once a given, is now cracking under geopolitical shifts and populist fire. If Germany and Italy move forward, the shock could redraw global finance, locking in a 6% U.S. trade gap, matching debt payments to defense budgets, and kicking off an era of a costly dollar that shakes up how Americans invest and spend, hitting both Main Street and Wall Street hard. The Congressional Budget Office's numbers lay out the risks, with soaring interest costs threatening budget stability, while central banks worldwide leaning harder into gold points to a deep shift that could shrink the dollar's reserve share by 4 to 5 points, cutting demand for treasuries and reshaping global cash flows for decades. This mess also stirs up social and political waves, as distrust in global systems feeds populist groups like the AfD, who pounce on economic fears to rattle the establishment, while in America, a fading dollar safe haven vibe could crank up calls for trade walls, straining ties with allies. Germany's past experience and NATO's framework give a roadmap, but the real hurdle is the political and economic fallout. For Merz, gold's a double-edged sword. Bringing it back could give him an edge in trade talks but might tick off the US, while sitting tight lets the AfD keep hammering him for weak sovereignty. Meloni's in the same boat, balancing campaign promises with keeping Italy's Eurozone clout and dodging a full-on trade fight with America. The New York Fed, long a rock of financial stability, now faces a reckoning, its role as the world's gold bank under fire as countries rethink leaning on US systems. Pulling out such a huge gold stash could spark a mindset shift in markets, boosting gold's role as a safety net and nudging other nations to tweak their reserve plans, a chain reaction that could speed up the move away from the dollar. This unfolding drama, built on old-school trust but driven by today's geopolitical clashes, is a wake-up call that paper money's worth, no matter how big, hinges on trust, now visibly fraying under the push and pull of national agendas. What's your take on this game-changing moment in global finance? Drop your thoughts in the comments, hit subscribe, and turn on notifications to keep up with this and other big stories shaping our world.